This video provides an easy-to-understand look at Amber Enterprises' Q4 earnings, the recent stock fall, and which Indian companies stand to win from these market shifts. We are diving into the big picture, understanding the massive single-day stock crash and what top research brokerages have to say about Amber's future. The executive summary reveals the Monday crash saw Amber's stock fall by over 15%, the biggest single-day drop in 4 years. This happened because Q4 earnings revealed disappointing FY27 guidelines due to higher operating costs, wage hikes, and delayed factory projects. Brokerage reactions were immediate. JP Morgan gave a neutral rating due to missed FY27 growth estimates and project delays. CLSA gave an outperform rating but was disappointed by low profit margin guidance. Consensus coverage resulted in a target cut, trimming short-term earnings estimates. Amber is under pressure due to costly raw materials like copper and gold, which the company is slow to pass on to clients. Higher minimum wages in key manufacturing locations and a 6-month delay in bare-printed circuit board trials also contribute to the challenges. When a major market player like Amber stumbles, competitors and client brands quickly take advantage. We will now look at who stands to gain from this situation. Direct EMS rivals like Dixon Technologies and PG Electroplast are gaining ground. Dixon continues to scale under central PLI schemes, and PG Electroplast excels at cost-effective manufacturing, competing strongly in Amber's consumer segment. The 6-month delay in Amber's PCB trial runs creates a domestic supply gap. Local tech firms like Kaynes Technology and Syrma SGS Technology are stepping in, expanding capacity to secure local orders and grab market share. AC brands like Voltas, Blue Star, Daikin, and LG Electronics are receiving short-term relief. The lag in Amber passing through increased raw material costs allows these client brands to source components at cheaper rates, protecting their profit margins during peak summer sales. The FY27 growth targets are mixed. While the electronics and mobility segments show 40% and 35% growth, the crucial consumer durables segment, which brings the most business, is guided at only 13 to 14% growth, lower than the 16% brokerages desired. PCB project timelines have been pushed back. Korea Circuits construction is now expected to begin in June 2026. Ascent Circuits trial production starts in September to October 2026, and Korea Circuits trial production is delayed until Q3 FY28. CLSA, with an outperform rating, expects margins to recover in FY28 as costs normalize and are passed through, indicating a longer-term recovery for Amber Enterprises. Thank you for watching this video. We appreciate your interest in the Indian EMS sector's future.